Good afternoon. This is the Chorus Call conference operator. Welcome, and thank you for joining the Acea Group 2015 through 2019 Business Plan conference call. As a reminder, all participants are in listen-only mode. After the presentation, there will be an opportunity to ask questions. Should anyone need assistance during the conference call, they may signal an operator by pressing star and 0 on their telephone. At this time, I would like to turn the conference over to Ms. Ira Angrisani, Investor Relations Officer. Please go ahead, madam.
Good afternoon to all of you, and thank you for taking part in today's conference call for the presentation of 2015-2019 Acea Group Business Plan. Alberto Irace, CEO of the company, will now disclose the main items of the business plan. Then Alberto Irace, the CFO, Franco Balsamo, and I will be available for a Q&A section. Please, Alberto, go on.
Good afternoon to all of you again. Let me share with you the main items of the business plan, draw up in substantial continuity with the past. The strategies foresee growth in regulated activities, growth acceleration in environment business area, a major transformation to create a company whose main strength lies in technological innovation. Acea would be the first fully digital multi-utility in Italy. The project we named Acea 2.0. Acea confirms its strong commitment to operational and organizational efficiency, to innovation, and to improving the quality of our services. Our aim is also to maintain and improve a solid financial structure. We are also firmly committed to providing satisfactory shareholder returns through a sustainable, transparent dividend policy based on a payout ratio of between 50 and 60% of consolidated net profit before non-controlling interests, with a minimum dividend per share of 40 cents per annum. Acea today is an integrated multi-utility. In the environment, Acea treated over 770,000 tons of waste in 2014. We produced about 250 gigawatt hour of electricity out of the plan. The area in which we concentrated those activities lies in 3 regions in the central of Italy: Umbria, Lazio, and Tuscany. In energy, Acea is one of the main Italian energy players, with about 11 terawatt-hour of electricity sold in 2014 to about 1.5 million customers. Acea also owns and operates 7 hydroelectric power plants that produce 122 megawatts, and 3 thermal plants that produce 243 megawatts. In grids, Acea is one of the leading operators in Italy, distributing over 10 terawatt-hour of energy in the city of Rome, more or less 1.6 million meters. We also manage the public lighting with over 270,000 lighting points in the city of Rome. We are also engaged in several energy efficiency projects. In the water, we sold in 2014 540 million cubic meters of potable water to nearly 9 million customers. Acea is a leading operator in Italy, and once again we operate for this business in Lazio, Tuscany, Umbria, and Campania. Acea has also been active for many years in Latin America countries where we provide some water management service. The Acea shareholder sector, as you see, the city of Rome that owns 51%. Then we have the Caltagirone Group as a second shareholder with more or less 15% of the shares. Then we have Suez Environment, I'm sure you know, Norges Bank, and other shareholders. Slide 5 shows Acea's strength and competitive advantage, and the strategic priority that I have already mentioned, and which I intend to describe in more detail in the following slide. I should like to stress that this plan has been drawn up on a standalone basis In one of the last slides, I will describe potential additional opportunities not included in the figure which follow in the next slide. One of the pillars of the business plan, as I told you, is the implementation of the project named Acea 2.0. We are working hand in hand with SAP, the leader company in this sector. The project aims to rationalize and streamline operational processes across all business areas and corporate departments. This objective will also be pursued via a major upgrade of our information system that will enable us by 2016 to revolutionize the way we manage our networks and supply our services. The Acea Group business plan, going to the figures, targets EBITDA of 864 million in 2019, up by over 20% on 2014. This will be the result of organic growth, above all in our regulated businesses. They generated and will continue to generate around 75% of consolidated EBITDA. Let me mention a number of targets we have set for 2019 and which we'll later explain in more detail. Net profit before non-controlling interests of 247 million, up 46% on 2014. Net debt stable over the period of the plan and amounting to 2,251 million, indicating a particularly solid financial structure. Pre-tax ROIC of approximately 12%. Slide 9 shows the contribution of each business area to achieving the EBITDA target for 2019, amounting to 864 million. In addition to planned growth in the various sectors, I should like you to note the contribution made by efficiency improvement and the technological innovation, which will result in cost saving totally 70 million over the life of the plan and approximately 30 million on a recurring basis from 2019. The following slides show the efficiency achievable in the various business areas, thanks to implementation of the project Acea 2.0, digitalization of the management of electricity and water distribution network, and the procurement consolidation. As regards corporate activity, cost saving will be achieved by standardizing processes and insourcing. And you can see the figures by process in these slides, which are very much interesting in my view. In next slide, as you are all aware, we are in the process of consulting with the regulator on the setting of tariffs for regulated sectors. The business plan has consequently been drawn up on the basis of the current approach to determining the allowed cost of capital. We have therefore assumed, with an eye on the approach adopted in mature regulatory system, and by this I'm referring above all the UK, but also Germany and Netherlands, an extension of the period used as the basis of calculating the risk-free rate and RPI to a longer period equal to 10 years. We have also held the resulting cost of capital flat throughout the life of the plan. The slide shows also the RAB for the water business used as basis of setting the tariffs for the reference year, and the RAB for the electricity distribution business. As you can see, the RAB for the water business grows at a faster rate as this business area requires a higher level of CAPEX. I want to stress that CAPEX included in the plan assumes that regulator will set a satisfactory level for the allowed cost of debt. Clearly, of course, if profitability should fall short of the assumption as used in this plan, the company will revise its CAPEX program to adapt to the new framework, to a new regulatory framework. As noted above, assuming a reasonable, sustainable, transparent, and predictable regulation framework, Acea intends to invest 2.3 billion over the life of the plan, including approximately 80% in regulated businesses. We will continue to focus on regulated business and above all on water, 1.1 billion, and grids, 0.8 billion, capex that will contribute to increase the RAB. In the environment business area, the unregulated business expected to see the highest rate of growth and the pre-tax ROIC of approximately 23%. Total capex will be just under 240 million. Capex in the energy business area will amount to approximately 130 million over the life of the plan. The next slide, page 13, shows our strong commitment to maintaining a solid and competitive financial structure, capable of financing the capex included in the plan. The debt-EBITDA ratio is expected to fall from 2.9 times in 2014 to 2.6 times in 2019. I believe one of the lowest level in the industry sector. Our dividend will provide stable and sustainable shareholder returns based on our payout ratio of between 50 and 60% of consolidated net profit before non-controlling interest, with a minimum dividend per share of 40 cents per annum. Let us move on to look at the main growth drivers in the various business areas, starting with the environment. Page 15, where the group's area of operation in the Lazio region, marked by a significant capacity shortfall, offers Acea attractive growth opportunities. The business plan foresees capex aimed to expanding capacity in both waste-to-energy and composting, with aim of becoming number 3 in Italy waste management market. The main project regards completion of the third line of the San Vittore waste-to-energy plant, which is going on right now, upgrade expansion of the composting plant, and consolidation in the Lazio region via the revamp of waste-to-energy plants, some brownfield initiative. As noted previously, Acea's strategic position in the Lazio region offers attractive growth opportunity. The plan targets an increase in installed capacity of the group waste-to-energy plant from 25.5 megawatt in 2014 to 52.1 megawatt by the end of the plan, totally in the Lazio region. Also in 2021, the second line of the other plant we foresee in the Lazio region will enter in operation for about 12 megawatt. Composting capacity is also due to increase, rising from 220,000 tons per year in 2014 to 683,000 tons in 2019, including 654,000 tons in Lazio. Sorry. Slide at page 17 summarizes the principal targets for the environment business area. Thanks to a major capex program, which will enable us to significantly increase the volume of waste treated to over 1.8 million tons, we expect an EBITDA to double to 114 million. Let's go now to the energy. In the energy business area, Project Acea 2.0 will enable us to complete the re-engineering of processes, will result in improved CRM, the streamlining of processes, migration of our billing system to new SAP solution, SAP ISU, and the monitoring of system to boost our performance in terms of the issue and deliver of bills to our customers. We also aim to improve the customer mix to focus attention on more profitable customers. The EBITDA target for the energy business area in 2019 is 123 million with the CapEx totaling 133 million. At the end of 2014, the regulator, the AEXI, revised the enhanced protection market tariff for 2014, applying a partial adjustment to take into account of an increase in the specific unpaid ratio in the urban area, specifically for the city like Rome. This has opened the way to a new approach to setting retail price aimed at ensuring the financial stability of operators by taking into account the actual cost incurred and the working capital structure of each operator. Therefore, we assume in our figure this hypothesis. Moving at water, as you are aware, Acea is the leader operator in the water sector in Italy, with a strong presence in Lazio, Tuscany, Umbria, and part of Campania. Growth in the water sector will be entirely in the form of organic growth, thanks to a major CapEx program and efficiency improvements. Further potential upside may arise from the process of consolidation in this sector that the government is keen to encourage. Acea is ready to play its part in driving the process of consolidation among utilities in the central and southern Italy. Once the government has taken concrete steps towards implementing such policy, the process of consolidation is crucial for the future of utilities, which could benefit from significant economies of scale, thereby reducing costs for the end users, but we will talk of that also later on the slides. The EBITDA target for 2019 is 357 million, up 22% on 2014. CapEx will amount to 1,073 million over the life of the plan. The slide also shows the RAB for 2013, totaling 1.4 billion, including approximately 1 billion referring to the operators in Eto 2 Lazio and Eto 5 Frosinone, while 400 million is attributable to the water operators in Tuscany and Umbria. The RAB will grow significantly over the life of the plan, reflecting the great amount of investment required in the sector, and is expected to reach approximately 2 billion in 2019. Going to the grids, growth in the grids business area will be achieved also by modernizing the distribution network in Rome as part of a smart city approach. In addition to operational efficiency improvements, the new workforce management system is due to go live in the first half of 2016. Some additional synergy could be achieved by managing with the same system electrical and water grids together. Modernization and expansion of the public lighting network in Rome will also take place. This will involve the replacement of 188,000 bulbs with LED technology in the city of Rome, resulting in substantial energy cost saving. This project, which is one of the bigger in the world in the sector, will be financed by the city of Rome, fully financed by that. The following slides summarize the objective in this business area, targeting a EBITDA of 270 million in 2019 and total capex of 763 million over the life of the plan. The RAB in 2013 relating to distribution alone amounts to 1.5 billion. About the corporate, with regard to the corporate activity, capex amounting to 78 million will primarily focus on technological innovation. The planned efficiency will enable us to stabilize EBITDA at zero throughout the period of the plan. Now let's talk about the process of consolidation in local utility. As mentioned earlier, upside potential may arise from the process of consolidation in the water sector that the government is keen to encourage. Acea is ready to take advantage of the opportunities that will arise, leveraging our leading role in the management of water resource in Italy and our strong roots in the area in which we operate, and also our industrial know-how and financial capacity in order to enter into the consolidation process. Slide 30 assumes the acquisition of full control of companies operating in the region in which Acea is already present, namely Lazio, Tuscany, and Umbria. Implementation of such a growth strategy is perfectly sustainable from a financial point of view. In detail, this would involve consolidation among the water companies operating in the Lazio region with the aim of creating a single regional operator, over 1 million inhabitants, and estimated EBITDA of approximately 60 million in 2019. Consolidation among the water companies in Tuscany and Umbria, in which Acea already has equity interest over 4 million inhabitants, and estimated total EBITDA of 450 million in 2019. This business combination would result in more significant synergy than those currently available to operators who have to date not been able to achieve a high degree of efficiency. The great effort in promoting efficiency through Acea 2.0 will allow us to use technological solution as a format applicable to the companies acquired or aggregated. The last slide shows a brief summary of the key aspects of the plan, broken down by business area. And that is the last slide. I thank you for your attention. Can you now proceed with the Q&A session, and I will be pleased to answer your questions.
Excuse me, this is the Chorus Call conference operator. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. To remove yourself from the question queue, please press star and two. We kindly ask you to use handsets when asking questions. The first question is from Mr. Javier Suarez of Mediobanca. Please go ahead, sir.
Hi, good afternoon to everyone. This is Javier at Mediobanca. Several questions on my side. The first one is on the financials, on the numbers that you have been providing with for 2019, the target. Can you give us the net income target after minorities for 2019? That is the net income that should be the basis for the dividend payment. A more general question on the general thought of the company on equilibrium between capex and dividends. I have seen that somehow the company has decided to reduce payout in order to take the investment opportunity that you may have on water and waste. I would like you to elaborate on the rationale for that. Then on the business plan numbers, I would like to know in the slide number 17, when you are showing the target of EBITDA for the environmental business, if you can split this 114 million euros between the contribution of the waste to energy business and then the treatment business. Also on the slide number 20, on the target of 123 million euros for the energy business, the split between sales and production, that is within that number. And then on the water business, on the slide.
Wait, please, we are writing.
No,
yeah.
Please.
So we remained at the split at the EBITDA level for the energy sector?
Exactly. In the slide number 20, the 123 million euros of EBITDA, you can split the contribution of the sales, the supply business, and the production business. Okay. And then on the slide number 23, when you are showing the target for the water business at 357 million euros, if you can kindly provide us with which is within that number, that is the contribution of the fully consolidated Atos, then the net income from the equity consolidated Atos, and then maybe the international business, engineering business, if you can split that contribution for us. And the very final question I promise is on the
no problem.
yeah, and on the slide number 11, can you make explicit the 10-year bond yield and the inflation that you have considered when elaborating your business plan, or putting the question in a slightly different term, which is the allowed return on RAP that you are considering for your regulated activities? Thank you.
Okay.
Io rispondo forse rispondete voi alla 1, alla 3, magari su CAPEX e di tanto okay.
Go ahead. The question in terms of net income, you have requested the net income forecasted for the end of 2019 is 247 million euros, if this is the question. In terms of splitting between EBITDA in the energy business, so the splitting between production and generation of electricity and the EBITDA generated by sales activity, taking into account that the total EBITDA forecasted is 123 million euro, the splitting is roughly 50 million euro in the generation activity, and the remaining part on sales that include free market and the protected market.
So production is 50
million euro.
Mm-hmm.
Okay. In the water business, if I will catch your question, was related to expected EBITDA for the foreign activities is in about of 10 million euro EBITDA.
And which is the contribution from the equity consolidated subsidiaries that is included into these numbers of 357 million euros?
At the end of the year 2019 is in the region of 30 million euros.
30,
30, taking into account the Delta network. And finally, in the environment,
could you repeat your question in the environment sector?
To split between waste to energy and organic composite plant.
We don't do treatment, as you know, Javier. Maybe you mean the compost.
Exactly.
Between waste to energy activity and compost.
In a global picture, just to summarize and give you two figures that more or less cover the combination of the two business areas, let's say that 64 million euro are generated by the company area that is 100% involved in the waste to energy activity, and the remaining 50 million is other activity not related to the generation of electricity from waste.
Okay, I will try to give more detail about the capex and dividend, and let me say that the plan full finance the capex and the dividend. And most of the capex are in the regulated activity. We believe that capex in that activity allow the company to distribute the dividend that we planned in the plan. So we see a financial structure that even in that perspective can still improve in the life of the plan. For the WACC, the slide number 11, what we said is that we maintained the same WACC structure of the current regulatory framework. We only changed the figures of the risk-free rate using the average of the past 10 years. And we used also the RPI for the result of the past 10 years as well. So you can easily find out the result, because you perfectly know the WACC structure that the authority is applying, so we didn't change any other assumption of that formula. We only applied something that, in our opinion, has to take into consideration by the authority in order to assure a WACC that is not, let me say, influenced by the particular momentum due to the European Central Bank activity and the specific volatility that we are experimenting in this stage of the market.
I think that we have finished with you.
Thank you. Thank you, Ira.
Okay, the next question is from Mr. Enrico Bartoli of MainFirst. Please go ahead, sir.
Hi, good afternoon. A few questions also on my side. First of all, slide 23 on the RAB evolution in the water business. If I understand well, the 1.4 billion for 2019 is related to the tariffs and that year. So could you please give us the figure that you expect in terms of calendar RAB, so the capital employed at the end of the plan period for the Atos fully consolidated? Then I have a question related to the waste business. If you can give us...
I didn't understand well the question. May you please repeat about the RAB? Because
yeah, the RAB. I understand that the 1.4 billion that you provide in slide 23 for 2019 is the value of the RAB on which 2019 tariffs are expected to be based. Is that right?
Right, you're right.
So there will be a further. So there should be the value of capital employed at the end of 2017. So if it's possible to have the evolution in the next 2 years, so having actually the capital employed that you expect at the end of 2019, at the end of the capex plan that you have in the plan. Then a question on the waste business. If you can give us a hint on the timing in which you expect the contribution from the additional waste to energy capacity to contribute to EBITDA, and also for the other plants that are going to start up during the period. And in general, for the capex plan, if you can give us some indication of the profile, more or less year by year, that we are going to expect during the 5-year plan. Then I have a general question. You assume in your returns of RAB the average of the 10-year of the yield of the BTP and RPI. During, let's say, the discussions that you had with the regulator, you think that there is a chance that, let's say, this more long-term view is going to be more or less agreed by the regulator, considering the high volatility, particularly in the bond market recently. And the very last one is on the assumption that you have in the plan in terms of further optimization in the working capital. And in particular, if during this year, 2015, we are going to see some further improvement in the working capital, and if the net debt is possible, that will be lower than what you reported at the end of 2014. Thank you.
Okay, just start with your first request related to the capital employed at the year, the accounting year, let's say 2017, and this is very close to 2 billion euro, precisely is 1960. And for the asset fully consolidated, so related to Ato 2 and Ato 5. In terms of...
sorry, could you repeat the figure that I didn't catch that?
1960, so very close to 2 billion.
Okay, thank you.
In terms of improvement in the working capital, the assumptions taken in the business plan start on the efficiency that also the new system that our CEO described before, in order to re-engineer all the billing process, all the process related to the collection of the collection process. In the business plan, we are forecasted to recover 4 days a year over the 5 years plan. So at the end, the benefit would be in the region of 20 days. In terms of 2015, as also you have seen in the delta between the net financial position at the end of 2014 and the current, we do believe that part of the improvement in working capital should be reached in the year 2015, and over the period between the years 2016 and 2019 to reach the benefit driven by the improvement in the efficiency of the billing process.
CapEx.
What
General.
I will answer the question about the WACC while they find the figures about
commercial operation,
the waste plant coming in commercial operation, about which is our feeling on the authority. The authority is perfectly aware that they have to implement a system in order to avoid both the volatility of this specific moment, but also to take into consideration of the specific risk of the country. So they can apply different methodology. They are now consulting, and they are thinking to consulting to which is the methodology. We thought, as I said, to use this approach in the plan because we consider that referring back to 10 years is one of the options that could be taken into consideration by the authority, or in any case to go back for a longer period of time in order to have a more stable and predictable system. So they are definitely thinking to something like that. I'm not sure, of course, which would be the final solution, but then we will discuss of that, or we will continue to discuss with the authority, but they are perfectly aware of how much is critical, and they are perfectly aware that our investment policy and in the next future, not only for ACEA, will depend on their decision. And as I said before, we will take into consideration the determination of the authority.
In terms of CapEx, if I well understood your question, is more or less the evolution of the CapEx plan year per year. Let me say that in the year 2014, we are elaborated a forecast about 400 million euro. We have a peak of investment of 500 million euro in the year 2017. That is in line with the evolution of the development of the new project that goes down at 220 million euro at the end of the plan. So 420 goes to 500, goes down to 220.
To 400.
420, sorry. In terms of investment in the waste-to-energy plant, and in particular to the new revamping for the new two plants, the capex is in about 80 million euro of total investment, and the commercial operation is forecasted for one plant at the beginning of the year 2019, and for the second one after the end of the plan, so at the beginning of the 2020 and 21.
Then we have also the third line of
San Vittore that is in commercial operation.
By the beginning of 2016.
Yes.
I think that this is all.
Yeah, perfect. Thank you very much.
Okay.
The next question is from Mr. Stefano Gambarini of Equita SIM. Please go ahead, sir.
Good afternoon, everybody. Could we start from the waste again? Just if I understood correctly, that San Vittore third line will enter in operation at the beginning of 16, or I guess should be the beginning of 17, just to understand.
No.
16.
Beginning of 16, probably by the end of 15.
Okay, many thanks. And then regarding the two new repowering, could you elaborate a little bit more regarding what is the contribution in terms of EBITDA that you expect, but also if you already have all the authorizations to go ahead with these investments. The second question regarding the increase of volumes from 0.8 million tons to 1.8 million tons, so 1 million tons of growth, where this growth come from? So where will you find the waste, and if you have what is the dynamic of prices that you expect on this increasing volumes? Then the second question regarding the consolidation process, where we are. Did you have some contacts already with the other companies, and we could expect some announcement by the end, or when this announcement could arrive, or the point is that you need some help from the government, if you can say in this way, regarding the trend of this, regarding new incentives for the consolidation process. Then I have, if I may, the last question regarding the starting RAB in the electricity and water business. In the electricity business, you have this starting RAB that, if I understood correctly, is the RAB of at the end of 13 at 1.4 billion euros, while the RAB at the end of 12 was higher, also including 180 million euros from measure. So if you can help us.
The figure of RAB do not include the meter.
Why you decided not to include that? And then
just because the RAB based on which it's based the calculation of tariff does not include the meter, because the meter take into consideration a standard methodology for the meter, so you can take into account probably which it is 137 million in 2013 and 144 in 2014 for the meter, 161 for 2015.
Okay, and
if you consider the RAB all together, you should add this amount.
So if I understood correctly, the RAB from meters are further 160, 180 million euros.
It's 137 2013, 144 2014, 161 2015.
Okay, yeah. And the same question regarding the water business. The start at the beginning, the RAB in 2012, if I'm not wrong, was 1,555 million. So just if you can help to understand this 1.4 billion of starting RAB, and just a clarification, the 2019 RAB that you report in this slide of 1.4 billion euros for Lazio and Frosinone is the calendar RAB of the end of 17, and so...
Got it.
Excuse me? Just to understand if this is...
It's the RAB related to 2017 on which you can calculate the tariff of 2019.
19, perfect. And the other question regarding the starting RAB in 13, if you can.
Starting RAB in the year 13?
13.
You can consider 1 year investment for the new model. Okay, if you got precisely the number is not included in the presentation, but there is a 1 year lag between the start of the new system. So, but to have the precise number, I can give it later.
Okay, and regarding the waste business?
The waste business, the EBITDA generated by the waste-to-energy plant is about 9-10 million euro. Any single plant has the capacity to treat 110,000 tons for year.
We are talking about, just to be clear, existing plant already authorized and only to be renewed. And we are planning to acquire it from the region Lazio. That's the hypothesis we are talking about, and about that we are already talking with the authority, with the region of Lazio that intend to sell their plant. For the consolidation, let me say that we gave in some way in the presentation the feasibility, and what we can say is that we will do everything it is in our possibility to help and to promote the process. Of course, there are some decisions that are outside the responsibility and the opportunity of the management that follow in the responsibility of the public shareholders that owns this company. They have to assume some to take some decision about how to what to do about the consolidation process, and that decision is outside the perimeter of our predictability. Of course, discussions are already in place. What I can add to that is, if we talk about the municipality of Rome, the municipality of Rome already declared that they are thinking to be in a positive perspective to a possibility to dilute their participation in the Acea company in order to and in the perspective of the industrial project to take the opportunity of the consolidation process in the central of Italy. So they declared their disponibility. The mayor of Rome already said that, but of course this will has to cross the will of other shareholders and other opportunities in the country. As we said, what we did is to try to come up with some figures of the opportunity, which are disclosed with the plan, and what would be the impact in terms of EBITDA for Acea. And let me also add that even if we consider by hypothesis to acquire that company, that would be sustainable by the financial structure of the company and possible.
Okay, just last question, if I may. Regarding the capex in the grids, 763 million euros, what are the regulated part of this capex and what are referred to public illumination? What I mean is just to understand the trend of the RAB that despite such huge investments remains flat.
Mr. Gambarini, as I said before, the public lighting is an investment fully financed by the municipality of Rome. So they fully financed investment, which is, by the way, more or less 50 million investment. We are only in charge of the management of the public lighting, and we have some advantage of the efficiency that comes from the project. About 163 million capex for grids are completely investment capex that goes to increase the RAB.
Okay. Many thanks.
As a reminder, if you wish to register for a question, please press star and 1 on your telephone. The next question is a follow-up question from Mr. Javier Suarez of Mediobanca. Please go ahead, sir.
Many thanks. I'm sorry for coming back again. It's on again in the numbers for 2019. Can you help us to understand from the EBITDA of 864 million euros to go into the net profit before non-controlling interest of 247 million euros? Which is the provisions that you are assuming, the taxation that you are assuming, and the cost of debt that you are assuming by 2019. And again, sorry, I don't know if I understood well, but can you repeat which is the net income after minorities that your plan has for 2019?
Well, the figure I gave you is the number before the minorities. 247 million is the result before minorities. I don't have after minorities because I don't know what will be the minorities at the end of 2019, but if the perimeter of asset remain as it is today, is in line with the current, we can elaborate it, but it's not included into the business plan. In terms of cost of debt, we have kept the interest rate in the level of 3%, flat for over the period on the assumptions that our cost of debt is stable. The maturity is 7 years. The remaining part is at floating rate, so we do not foresee that the LIBOR rate could reach that level. So could be conservative or not, but we have kept the 3% in line with the evolution of the indebtedness. In terms of tax rate, we have kept the tax rate we have in the first quarter of 2014 that takes the benefit driven by the new Robin Hood tax. Without the Robin Hood tax, it is in about 40%. And finally, the last question was, sorry, that
on the provisioning, the provisions that you are assuming.
Okay, in terms of EBIT, there are two components. One is represented by the provisions, and we have forecasted a level that is in line with the existing one, just to be prudent. Are not higher, are not lower. Probably it is provision is conservative, but we have taken this safe approach, otherwise. And in terms of amortization, the amortizations are rising related to the fact that the company is either increasing the investment plan, and the other side, in order to match the accounting principle, the accelerations in the tariff should follow also in terms of increasing on the amortization.
And as a follow-up, if I may, and again...
Otherwise, we go into the net income for the years, but you can elaborate it by yourself.
And again, sorry for coming back to this, but on the question on the slide number 11, and again, with your approach to calculate the allowed return on RAP, maintaining the formula, but recalculating the historical risk-free rate and the inflation. Can you share with us which is your calculation for the last 10 years inflation in Italy, or the one that you have utilized?
For the last year, you think for...
if I understood correctly, yes. you have maintained the methodology, the formula, and you have recalculated the 10-year risk-free rate, and then the inflation for the last 10 years. And I was curious to see which is your calculation.
The average.
Yeah.
You want to know the average or the...
The one that you have used on your business plan, yeah, the average, I guess.
Is about 1.5%, something like that.
1.5% for inflation during the last 10 years.
Correct.
As an average.
Yeah.
Okay. And very last one.
Calculation. So provided that we have taken the proper rate is an early calculation.
Yeah, and the very final one, I promise. The consensus for 2015 is pointing to a net income of 190 million euros after minorities, and then an EBITDA of 740 million euros. Do you feel comfortable with that, with those numbers?
Well, let me say, we feel comfortable. Of course, we will be able to be more comfortable after the first half result. But let me say that we feel comfortable.
You say 170?
No, 190. 90.
Yes.
90.
Okay.
Yeah, well, yeah.
That is after minorities, eh?
Yeah. Yep.
Okay, many thanks.
You're welcome.
The next question is from Mr. Enrico Bartoli of MainFirst. Please go ahead, sir.
Sorry, a quick follow-up also on my side. One question regarding the electricity supply business. I saw that you are expecting a significant reduction in the volume sold by 2019. So could you elaborate a bit on the evolution that you expect on the unit supply margins? I guess that they are going up, and why?
What we foresee is a reduction of the announced protected market, and to maintain more or less the number of customers in the free market for electricity, with an increase of the gas customers. So the strategy, let me say, is to have a better quality mix of customers in order to increase the margin per customer, and also to cash the revenues that we built to those customers. So also we foresee as I said before, the full recovery of the cost on the announced protected market.
Okay. Sorry, and the very last one regarding increasing water tariffs that you assume. I guess that this year is going to be quite high, still around 9%. What is your expectation for starting 2016?
Well, you see, I don't see any issue anymore on increasing the tariff that we apply to the final customers, because by increasing in the Roman concession of 9 plus 9 of 2014 and 15, now we will have an increase of tariff more or less of 5%, 4% by year, which is affordable by the final customers. But if you want, maybe we can be more precise. Because it's a matter of how many adjustments we have to apply in the tariff of next year. So we'll be able to calculate that only when the new methodology will be issued. But I don't see any critical point on that side.
Okay, thank you very much.
The next question is from Mr. Stefano Gambarini of Equita SIM. Please go ahead, sir.
Yes, just regarding the investments of the companies consolidated using the equity method. If you can give us these figures and the level of indebtedness that you have in these companies in order to have a sort of conciliation with the fully consolidation also of these companies, if I may.
Well,
we don't have an elaborated document for the other company.
Okay, thanks.
If you need, we can
calculate and be back to you with that, but.
No, just because I noticed that the rubles in this case will go substantial by 50% from 14 to 19.
Yeah, the company are applying in a strong amortization in the tariff they are applying, so their tariff will increase year by year and finance most of the capex. So let me say that we will not have such increase of the debt in this company, also because their financial structure doesn't allow to more debt. So.
Okay. We have elaborated thousands of figures, but we don't have this one.
We don't have.
We have got the numbers.
Let me give you a flavor. They cannot issue more debt, more than they have already. So you would not have increasing of debt. So we can elaborate the figure if you want and be back to you.
Okay. And this part, the 0.4 billion euros, is the part related to your stake of
Yeah.
Okay. Many thanks.
Yeah.
Gentlemen, Mrs. Agrisani, there are no questions registered at this time.
Well, okay. Let me thank you, everybody, for your presence at our conference, and hoping to see you soon. I say thank you again to everybody.
Thank you to all of you. Bye.
Bye.